All right, let's start this Sunday session on 126. It is going to be a long one. Grab a snack. We have about 140, maybe 135, 140 tickers to go through. There will be another video tonight, which gives us an idea what to expect this week, and it's a lot. It is a lot. There's going to be so much potential for this week. It's unbelievable. We have the Fed. We have inflation reports. We have the mega caps reporting all in 1 week. Some other housing data. It's going to be quite eventful, potentially. So, for example, if I just look at the QQQ could go to 544 or 512. We don't know. Looking at the IWM, more on that later, but the IWM needs to make a new high. Otherwise, it might be a drag on the market. So let's just jump into the tickers that you guys have asked for. And they are alphabetically ordered in 3 different videos. So we'll start with Alcoa. The price action has been volatile over the earnings. So the candle they placed on the earnings looks pretty strong. And the support might look weaker. So if they lose 36, they might test 34 and lose it. So losing 36 might bring you $2 to $3 of downside in a series of lower lows and lower highs. This is nothing to say about the investment in Alcoa. Let's zoom out for that. So it's not a pretty picture, but it's not that ugly. You have a lot of sellers above, starting with the reaction from the earnings, and you have a lot of buyers below. So there is support, but it's scattered from here to 27. 27 should be bulletproof, barring some disaster globally. So that's the story there. If from an investment perspective, there's not a lot to do. If I wanted to get long, I should leave room to add. That's going to be a theme, a recurring theme for this year. All right, so Apple's had a tizzy this week. Some weird stuff going on in Apple. For example, these long wicks that come out of nowhere. And there was one not too long ago. So it's like they're almost testing the floor. Either they want to establish it as a floor or they're ready to poke through it lower. Be careful with it. Fundamentally, you need a headline on Apple. Headline in the sense where, you know, they probably need a new CEO. I've been very harsh about it, but it's reality. There's something going on with, believe it or not, I mean, it's a long shot, but I'm going to mention it. TikTok might affect Apple sales. I don't know if it's good or bad. So I don't know if you know that, but TikTok went offline for about 14 hours. And if people deleted the app, when it came back online, they can't download the app. They can just use the app. I hear that that it is the phones are going for like thousands of dollars. Like if you can sell an iPhone with a TikTok app on it, somebody will pay you. I've seen numbers like $6,000 or $7,000 or $8,000 for the phone. Maybe if they're an influencer and they deleted it by mistake or something. Anyway, how will this affect, if true, the cycle of selling phones? Like if I have a phone with TikTok on it, I'm not selling it, right? If I'm like addicted to TikTok or I need it for my work or something. So don't know if it's a thing, but let's just say it's another wrinkle. But there is earnings in 4 days. So whatever I say now doesn't matter. Now, the market is at all-time highs. This stock is pretty close to all-time highs. How much expectations have been built into the stock? That's probably the only thing that's going to matter in 4 days versus what they deliver. It could be a great report. It should be a good, solid report. Will it wow or will it disappoint? I will have more on the day of the earnings because of the options data. ABBV. So there's a headline coming for healthcare stocks where either Kennedy gets appointed or not, confirmed, whatever the term is. If he does not get confirmed for whatever reason, the whole sector of healthcare and food is going to soar. It's probably a long shot. So until then, I would respect the fundamentals of the chart, which are that there are sellers above as you approach 180. The opportunity doesn't happen until they go above 183. And there are buyers below. Last week's low is a decent buyer. 163, 164 is a stronger buyer. If you lose 164, for whatever reason, you will lose a lot more, like a lot more. $15 to $20 more from there. So that's not imminent, but they are in the process of losing a level. So I'll give you another interim important level, 174. Get back closer to that red line, and you would have less odds of confirming this as a loss, which is 170. Airbnb. Somebody shorted Airbnb of our group. Was it Tom? Aggressively. So he's doing well if that was him. And this was a pretty bad tick on Friday. Look at how it's kind of losing the last two harsh bounces. So it needs a bounce ASAP, and I think the bounce will be hard to breach 133, 132. And if they can't, they're probably going lower. Let me zoom out and see what it looks like. Okay, so this looks like a bearish scenario that wants to retest the 118 or lower, which is normal because it's, for some reason, look at it from back then, 2023 October. It was a flash bounce, a massive bounce, another crash, and a flash bounce. So that zone, anything below 118 is extremely important. But anything between here and 118 is not important at all. They're going through it like it's not there. So it does not provide a lot of support. A couple of red ticks more, and that thing will retest the 116. You better not lose 110 because the downside will be devastating. I can't imagine what will bring you down there. A global shutdown, I don't know, or maybe some law changes, legal changes somewhere. We'll see. Adobe. So the trade I suggested came under fire. It was really red, but because we took it with support and backup support, the backup support kicked in, and now the trade is okay. It is statistically viable. I'm not too panicked about it, but if it was large, I would have cut it to size to where it's not going to hurt me. The company is good, the P&L is good. It's never cheap, so value is not going to kick in. So it's all about the chart right now. We do have a hard bounce, therefore we know that there's a buyer. They better not lose the low they just made, which was 404. If so, then we probably lose another $5 to $20 in a series of lower lows and lower highs. Hopefully it just hangs out here until our time expires or it just meanders higher. If it goes to flat, I would leave nothing open in it if I left some open. That's my take. The trade went bad. I'm no longer trying to make money. I'm trying to get out with the least amount of damage. For me, $40 damage per contract was good enough, and you had that opportunity this week. Actually, less than that. So, ADI. Analog devices. How is a company called Analog Anything still in business? pretty strange. Solid support, short term. They're falling into solid support and actually midterm. So there are buyers scattered from 215 on down to 205. I wouldn't panic if I'm long. If I'm looking to get long, as long as I'm not all the way in because the markets are at all-time highs, I would engage some earnings in 24 days. This looks pretty difficult. How will it take 240 out and why? I wouldn't hold calls. I would be, if you're an investor for the long term, I would be fine with that. If you're a trader, there's no reason to buy a call right here. Selling a put or a put spread might work. ADM. I don't like the trend, lower lows and lower highs when the markets cannot stop rallying. So a lot is riding on that red line. You lose that red line, you're going to finish the other red line. They do have a strong buyer at 49, yet they chose to poke through it to 48.5. I know it's 50 cents, but why would you do that? A harsh bounce right after. Earnings in 9 days. That's going to be interesting. Sellers at 53 or higher, hard sellers. Harder sellers at 55 or higher. If it gets to 58, I'm out as a trader. If it gets to 55 and I'm green, I'm out. If I sold a put or a put spread, I should mind my business and watch it and make sure I really want to own it down there. Those two, the white line, solid support, the maybe target. The white box, solid resistance, maybe target. Earnings in 9 days. ALAB, that came to us as an idea from Raghu. Thank you to her. Losing 125 is not good, technically. You do have support from last week. Lose last week's support, this thing will probably challenge 100. Luckily, that is a pivotal zone. If you look left, they fought over 100 hard right there back in November of last year. And they broke out. They established it as footing. So coming down here is not the end of the world. This is a pretty good trend. Let's look at it. That's pretty solid trend. So I'm going to assume the fans of the stock will buy the dip. The matter of which dip is in question right here. 15 days they report earnings. This is a pretty steep sales cycle here on the quarterly basis. So it's an aggressive stock. It reminds me of Palantir, like the growth rate and the profitability or lack thereof. So nothing against it. Just pick your entry points. If I'm long, I'm not adding here. I think we will have a chance to add under 100. Now you can probably do it now by selling puts down there. Let's say I said, okay, I want to own the stock for a long time and I want to own 400 shares. I would start by selling 1 or 2 puts and that's it. I don't have to wait for the dip. Applied Materials, the company is a dinosaur. That's a good thing. They've been through so much. And I think there are a lot of sellers from here to 220. I mean, what's it going to take out 220? So now you know the upside potential, $14 maybe. And the downside support is everywhere. From 180 to 160 or lower, a bunch of buyers. If you lose 160 or lower, you're going to come down to probably 135. That's not my forecast. I'm saying there's a lot of sellers above and above the above and a lot of buyers below. This is for me as a candidate for a credit put spread, not buying a call. If I'm an investor, I'm fine. If I'm buying a call, I better sell something else in order to finance it. There are earnings in about 3 weeks, so be careful. 2.5 weeks. AMD. I'm not too excited about AMD's future. I mean, they do have good management, but I think the story is getting stale without having headlines. Look left, they sold every rally. This one looks like the one before it, looks like the one before that. And going into earnings in 9 days. So not a happy picture for AMD. Luckily, they have other earnings coming in between now and then. They have the Fed, so they might get an artificial push to get through 132. 132 through 136 is a pretty tough area. And then there's a tougher area above that. So if I'm a trader, I'm selling puts or put spreads, yes. I'm not buying calls naked. I would have to finance the calls some other way. So it's like a risk-free out of my pocket. Otherwise, I'm putting too much in the hopes that this week is going to be different. Doesn't look different. Quarterly, it looks like there's an improvement in the last quarter they reported. So maybe they have turned the ship around. We'll see. Amazon, you know, I'm conflicted. This is one of my favorite companies of all time. It looks like it's breaking out and it looks like it wants to go to 250. If you give me this chart and I'll say, oof, this one's going to 250. Now there might be dips in between. So if there's a disappointment on earnings, I would look to buy dips. There are some issues with it operationally, like they're making mistakes now, but I think they have ways to make money left and right. So I'm not too worried about it that way. This chart is breaking out and it looks like it wants to be at 250. Don't buy a call because I said that. Buy the dip. Finance the call spread with a credit put spread, but earnings are in 11 days. So maybe I sell risk into this put, like a put spread, and I will get the implied volatility from the other companies reporting earnings. I don't remember it reporting earnings that late, 11 days away. They shuffled the earnings sequence this quarter. A lot of weird things going on. Anyway, credit put spread, I'm on board. Debit call spread, I mean, fine, as long as you put like a month on the clock. Combination of both, also good. Excellent P&L, buy the dip, every dip. Period, end of story. And that would be the advice I would do here. Buy the dip, any dip. Why now? Why not 3 days ago or a month ago or 6 weeks ago or 6 months ago? It's never been higher. Markets have never been higher. You waited so long, you might as well wait a little bit. I mean, does this look like a good base for anything? The company has amazing fundamentals. You will not find many companies that have P&Ls that look like this. So I wonder why it gapped up here and went. Arista. I don't understand this. No earnings, no nothing, and whoosh, it goes. Luckily, it's split, so people can sell puts in it. If it ever comes back down below 98, grab it with two hands. Those three circles. Look how pivotal that area was. Well, let's see here. They are okay. So they are $5 above the technical target of breaking out from these circles. So they overshot by $5. So this looks more like a target zone, technically speaking, than a starting point. How about you buy the dip into 123 or lower? I know it seems impossible for these stocks to fall. I promise you they will, through no fault of their own. Okay. ARM. Everything I said about Arista works here. We've discussed it in length. This company has an unusual situation with its profit and loss statement. Their gross margins are amazing. Their operational margins are terrible, but that is fixable, I think, most companies. Anyway, I would be in the mode of buying dips in this one. Last time it fell, we sold puts or put spreads. That is buying a dip. If you own the shares, sell covered calls. That's what I would do. I've owned shares for us and I've sold them. I've sold covered calls on them and I've sold puts when it fell before. So I'm actively trading it up here and I'm waiting, like Bitcoin, I'm waiting for it to crash, not through faults of its own, to reload on it like in size. Until then, I'll keep trading it, trying to generate cash into my pocket from trading. There are ways to do that. 10 days before the earnings. ASML, also a good P&L. It reports in 2 days. If it dips, we will buy the dip. We did that last time. And it was a no-brainer. So technically speaking, assuming there's no earnings, I can see it going to 770. And if it falls into 690 or 700 or lower, it becomes an opportunity 1. If it falls into 650, opportunity 2 with a stop. Because if for whatever reason, I keep saying these and they don't come to fruition most often because we are bulled up in the market, but one day they will. Look at this arrow, for example. I would have probably said if for whatever reason we lost 850, we might come down to this arrow. I know it's crazy back then. Well, here we are. Well, that same will play out off of the blue line. I'm not going to put the arrow because I don't want to entice people to short it because that's insane. But you should know that there's one level of support zones here that needs to hold so we can avoid talking about the blue. And if we come to the blue, there's a support zone at 670, 660, and of course the line at 637, loose 637, then you open a conversation on much lower prices. If that's going on, I bet you the S&P is in correction mode and it's under, like far under current price. Sell the rallies for me as a trade, buy the dips. You can do both by doing an iron condor, but not into earnings. Well, on earnings day, come to me. Maybe we look at the options and we see a trade. We've done a lot with the earnings trades this past week. We've done some good work. AVGO, awesome company. Buy dips. Don't short it in principle. You can short the price action, but don't short it in principle. If it clears last week's highs, it will probably go to 272. 260 or higher, I would be out if I'm a trader. If I'm looking to short, fade, whatever you want to call it, up there is fine. They don't report until 32 days. This here is pretty weak makeup of a chart on a normal chart. I would imagine in the next few months, they want to come back and establish it as better footing there. Because I'm using 2-hour charts, why not? Give me a reason why not. I go up and down when I see necessity. AXON, that's the old taser. If I look left, a bunch of sellers above. If I look below, a bunch of buyers below. There's really nothing to do. It's a decent P&L. They pretty much have no competition, so to speak. 588 or lower buying opportunities. There is a chance it's at 565 or lower. If it gets there, huge buyers at 544. So it is like solid support and backup support and some backup to that. And just the opposite is also true. Anything into that red line of 644, but anything above 620 into 644 and 664 should be heavy resistance. Just look left. Look at the volume that transpired up there. So I don't think it's going to be easy to buy calls. And it's going to be easier to buy puts if you want to. I would be a seller of a call, buyer of a put on a chart that looks like that. Fundamentals aside. Like, I think it's easier to come down here and trip down here. I think this path is easier than the upside, which is available. So I'm going to put a zone of sellers here, resistance. I wouldn't actively hold a put. I would sell a call to buy a put spread if I wanted to trade this. Earnings in about 37 days. It's possibly doable. But you're going against the grain. Everybody loves this stock. So there might be easier shorts. But I wouldn't be long. Boeing, I definitely would not be long. So I think they got a boost from GE's earnings last week, maybe. The inspiration is that Boeing wants to break out of 182. If it does, it has miles and miles of upside. Miles and miles of upside. So for me, this is a short here, or it's a book your longs if you're a trader. Look left, you will see that orange circle zone. That came from the really big pinch from last year. We noted, it's like, okay, what's going on here? There's a move coming, and the move was down. And now it took its time to come back up to here. That's good. It's drawing a handle. So this is a bullish pattern. The upside of which is too bullish, which makes it improbable for me. Kind of like the opposite of the concept of the TLT trade. Because if Boeing takes out 182 with force, in theory, it might have $40 to $55 of upside. I just don't see why this should do it now. Earnings are coming. Let's see which way it goes. I would not trade it into earnings, but I would take an earnings trades if you want that. Come in so we can look at the options. Maybe the options will give us clues to give us enough information to trade. Otherwise, avoid until then. I wouldn't short it into the earnings. I mean, what do you know that I don't? The stuff on the left are volume. BABA, I wouldn't touch this with a 10-foot pole. Okay, so Chinese stocks to me are a mystery. This one, even the earnings date is a mystery. So it says 3 days. I don't trust it. Double check your facts, okay? 93 plus has failed miserably before, so I would fade rallies. This was a spike that priced back and made a lower low twice. This is a spike that looks like it, like that. So I use strength to exit positions if I'm long. It has support, so I don't want you to short it. But if the support fails over the next few months, it might end up much lower, testing better support. It's a decent company, but I don't know anything about it or about China's intentions with its own company. So I avoid that whole sector. Bank of America, that is a bearish, depends on your time frame. It is a bearish chart. Looks like it wants 45. But if you zoom in, they want to pop before that happens, maybe. So um, 45.60 is a neckline that they need to hold. But first, I would look up. So if the banks are strong again this week, I can't imagine why, but the Fed will move the banks indirectly and directly. So whatever the Fed says this week, I think what a Fed does is already known. They're not going to do anything. He pretty much told us he's going to take his time. But what they say, if they're bearish, if they're bearish with their words, saying that we're definitely not going to raise next time either, or the time after that, cut rates. I mean, the movement in the rates will spur a movement in the banks, and the market has been inconsistent with it. Sometimes they rally with higher rates and other yields, and sometimes they fall with higher yields. They're inconsistent. For me, as a solution to this you can wait until the after the fact. I am short via a small starter position on the XLF and the KRE. They're both green, and I'm not rushing to do anything different. You could short single stocks like Berkshire or JP Morgan. Berkshire might be the safer one because it's not a bank. But anyway, we'll see. They already reported earnings, so that mystery is out of the way. I think if I were to make a judgment call, Bank of America will be at 45.20 before it is at 47.40 or 48. This a long wick. 45 is target 2 off of this red thing you see on my screen. I would not hold calls in Bank of America. Good company to own for the long term. I don't know who that is. Booz Allen Hamilton. Okay. Pretty big fail. Targets 1 and 2 are fulfilled, and then now you're falling into support. It looks like it should be able to hold support. You lose 126, you're going for a ride. I don't know, $15 lower. Earnings in 5 days. They better deliver a good message. BITO. So crypto is all the rage, I think for the wrong reasons. Presidents of the United States should not be blessing crypto. It competes with the US dollar. Let's see if he changes his tune. He might not impede it, but I'm pretty sure he doesn't want to help it gain popularity over the US dollar. So, which it can. It is a global asset class that could spur a currency. Bitcoin is not a currency. It's like gold, but the complex of crypto can spur a currency. I'll give you an example. Back in the day, Facebook came out and said we are creating a Libra coin. So it's money that you can use in the Facebook sphere. They have 3 billion users. If they let that happen, they shot it down last time. If they let that happen now, that would immediately be a huge currency competitor to every currency in the world. 3 billion users instantly. You don't want that as a government. I don't know about you, but if I was the government, I would not want that. So that's my take. I think the exuberance of the new presidency is misplaced. Crypto is going to continue to be crypto. The bullish part of crypto is I don't think it's going to have these huge drawdowns like before, because now Wall Street will lose billions because they have their clients' billions inside the ETFs. So they will do their best to control that. They will manipulate it directly or indirectly. They can manipulate it through message. They can send out liars to hit the CNBC sphere and say with complete confidence where price is going to go, and it becomes a self-fulfilling prophecy. Anyway, BITO is a hold and room to double and double the double. Trading wise on BITO, if you're looking to trade, you have huge sellers above, huge buyers below. 24.40 matters, 23 flat matters, a bunch of sellers anything above 27. Baker Hughes, the chart is done well. They had the opportunity to drop it to continue selling rallies here like they've done, like they did once, twice, and they averted the third time. So we can take that out so not to confuse people. This is, it wants to bounce. Let's see if they can take out 47. If they can't, they might end up at 43. Whatever this is, earnings in 4 days. So now if you look at this time frame, they're actually buying dips. Here's a long dip that was bought and a higher high. Here's a long dip that was bought and a higher high. So why not do another long dip that will be bought to a higher high? So from here to here. So if they are indeed continuing to buy dips, if they fall on earnings, you should probably buy the dip. Boyle, I don't trade Boyle. I wouldn't advise you. I would suggest to you to look into trading UNG, not Boyle. But anyway, so Boyle, we bought the dip in UNG, therefore Boyle. And up here, I don't know what to do because there's so much rhetoric and political talks around the U.S. being the Saudi Arabia of natural gas, blah, blah, blah. Politically, the U.S. benefited from all this Russia stuff and cutting off Russia because now we are supplying gas to Europe. So magically, as they say, automatically we became the sole supplier. And I don't think we're cheap with with natural gas. So do your homework on that front. Not an obvious place to belong. If they lose 62, 61, they're probably going to 52, 50, something like that. Rallies will be met by sellers at 72, and of course at that high peak. I would be a fade, like they might end up doing something like this. Bitcoin, everything that's about BITO applies here. How high can Bitcoin go? So the answer from Michael Saylor is, well, if it's not going to zero, it's going to 1 million. But that is not a scientific number. He is paraphrasing to say it's going to go like gold. How high is gold going to go? If it doesn't go to zero, it's going to 1 million. Why? Because they're both rare and they're getting harder to accumulate, right? One could argue that Bitcoin is even more rare than gold, so it's better at being gold than gold. It's artificial gold, which is totally controlled, which makes it very finite and very valuable in the end. I mean, if I wanted to invest in crypto, I would throw a few $100 in there. I wouldn't add. I would add at a systemic pace. Like every X months, I would add, and then I would leave a lot of dry powder, and I mean a lot of dry powder, to pile in when it crashes and everybody hates it. That's what I've done, and I've done pretty well with it. There's no perfect time to enter. Hey, I'm looking to invest in Bitcoin. When should I start? You should start whenever you decide you need to invest in crypto. Put in a little money just to get it out of your system and see how it does. And then when it time comes, not when it drops 10, 20%, that's nothing for crypto. When the time comes, you add a little bit more. And then when the time comes again, you add a little bit more. You can see here, 101 through 99, super strong buyers, and then super strong sellers. So those two areas become very catalytic. Strong support into 99. If you lose it, you might end up in the low 90s again and threaten to go to the 70s, which they averted in a magical move here in middle of January. And then they place the high. The highs are sell spots, resistance, but if you break through the highs, you accelerate. So if you tell me this is going to 118, 114, I wouldn't argue with you. They're buying dips out of nowhere, and they have a catalyst up above technically that can get them there. So I'm bullish Bitcoin in the long term. My strategy is to accumulate it. I just shared with you how. So on the chart, this starts to look attractive. From one perspective, like it's pretty dang low. The huge bounce level from, when was that? May of 2023. So one would think that it wants to go back up to 25. Now, I don't know much about the business, but I know that the chart says if they get to 23, they're going to be met with heavy sellers. In fact, a little bit lower. So yes, it has the opportunity to do what this guy did back here, but it will come to 22 and start to struggle. 23, you'll probably hang out, and maybe it ends up at 26. So if you're trading, that's the path. If you're investing, it's a decent starting point, knowing that you have support, kind of like Adobe, support just below and backup support that's even way better than the support you're banking on. It's not bargain. 11 days until earnings. So let's do this. You know, like 18 months ago, it was here and it bounced hard. So in order to see that lower plateau, you'd have to zoom out. Wow. Yeah, it's definitely an okay time to start. Volatile. Holy crap. I don't know who they are. Technically, this doesn't inspire starting long positions. So if a stock is going into a pile of sellers, I would exit if I was a trader. Like if I bought the dip for a trade, I would be out here. If I'm looking to get in, as a trade, I would look for dips into 122 or lower. If I'm looking to short, this would be a place I would start credit call spread. I don't know what your intentions are with this one. If you're an investor, there's no decision to be made. Just stay in it. You bought it. It looks like lower. Sell covered calls if you have them, if available. So this is a short again, in my opinion. I would hesitate to short it if I'm short the XLF. I think it's an easier, like Bank of America would be easier to short than this mystery stock. P&L is pretty solid. Technically speaking, it's a short. I look back and I see all of this. It's a prior fail. Now, if they go above 194, I think they make a new high above that one. Okay, so this one, they did half. So they did half. I'll do it this way. They did half and bounced. They bounced off of, look at this right there. So pretty good job. It respects the technicals. Look, prior fail, breakout, support, done deal. So now for the next few months, if you lose 160, I think you come to 140, but that is a big if. Until then, I use it as an entry. As you approach 166 to 160, it's to get long for a bounce. They obliterated this and covered that. So now they're tackling this level here. 194 to 190. That's their problem. So we'll put a box there. Actually, a little bit higher. Buy the dip, okay. These are pretty good solid supports below 174. So if you're trading it and you sold a put or a put spread on a dip, that's what I would do. I don't know what that is. That's a pretty nasty rejection. They celebrated the earnings and then they said, wait a minute, we absolutely hate it. So you better hold 393. Technically speaking, if you lose that, you probably have $100 to $150 of downside. Let me zoom left. Let's go with 100. 80 to 130. Because that's a pretty pronounced bounce. And if you lose it, in theory, that's your target downside, which makes no sense. So I'll take this alternative target, 80. So you will just get back into this zone of consolidation. Anything below 360 should be a solid entry point based on the chart. I know nothing about the business. Caterpillar, never short Caterpillar for no reason. I've said that so many times. It looked so weak just like 10 days ago. It looked like death for Caterpillar. We shorted it up here. It was perfect. And then look at this. This is target 1, 2, and it's approaching target 3 of that giant green M on my screen. Last chance for the bears. So it is shortable into that statement. How do you short Caterpillar? You think 6 times about it, especially going into earnings. You don't short it. You just trade the options of what they tell you about the earnings. Now, if it pops into 436, I would be okay by selling a credit call spread. I personally don't trade Caterpillar because I can chart the stock. I just haven't enjoyed trading it. Dips into that purple line that says resistance are buyable. The reason why I haven't changed the words is because not many people have asked me about it, and it just rallied so fast. Like this one, I would name it mini support. Mini, because it's not real support. Okay. Anything below that mini support is much better support. Anything at or below that purple should be solid footing. I don't know what brought it down to here, but it did. CFLT. Well, the R worked, but now we have more R's lower. So if you want, you can have, okay, we need another one of those here. And you have support down here. So as you approach 30, 50, resistance, and this one, better hold, otherwise you're going to open a trap door. What? There we go. Wow, there's a delay in TradingView. That showed up last week. I'm needing to reboot it every day, which never was the case. You just saw how long it took for it to draw this stuff. Immediate downside from this. Oof, that's pretty thick. Let me change it. I don't want to inspire too much confidence shorting this thing, okay? It is vulnerable, but only to take that back. So yeah, you might find yourself at 24 or lower. But not if you take out 30, 50, or 31. You take out 31 and you end up here. But you do have resistance. It looks like they're selling rallies and you go with the flow. Earnings in 2 weeks and change. Clean spark. If I was long, I would be out from a technical perspective. It looks like a breakout here, but look left. This has been consolidated so much and it's totally resistive. All of it. All of it. So pick your levels. 1350, 14, 1450, 15, 1550. Every level is huge resistance. You do have a trend going. And you do have targets of 14. So it could get to 14. I would use rallies to exit if I was long, unless I have a longer thesis on it. Earnings in 11 days. Comcast, a dying beast, they tell me. Earnings in 4 days. I have no idea how it's going to react. Solid support, you better hold. You lose 36 in Comcast, you're going to 34.50. Any rally into 40, I think, will be met with hard sellers. Anything above 39, I would be out if I'm long as a trade. If I'm an investor in Comcast, I better pray they get above 41, because look left, that blue box, they need to be above it. Costco, buy the dip moments in Costco. So I see it come up on social media, like there's a war of something. I don't know, something around DEI. Do your homework. It's not that important, because what's important is their P&L, right? Not their DEI, their P&L. So as long as their P&L is as good as it is, anything you hear about it is nonsense. Verify. You can't trust anything you see on social media, right? So technically, if you take out 957, you should be able to get to the high nines. Into the upper end of that letter R, which will be resistance. So buy the dip, yes, you have support from here to 900. Lose 900, you'll probably challenge 850, 860, and it would be an even better dip. It's still too expensive last time I checked. Let's check now. From the old ways of looking at things that are expensive. So let's look at their P&L. They grow single digits. So if I wanted to judge it, I will have to judge it, the PE. The PE is 55. That's definitely on the high end. It's not outrageous, but it's too expensive. Okay. Buy the dip, yes. Hold it, yes. Hold it, sell covered calls, absolutely. Sell puts to buy call spreads, yes. Sell put spreads to buy calls or call spreads, yes. Earnings in 40 days, I think it's totally tradable. Oh, and on Costco, every beginning of every month, you will get a comp report, which is mini earnings reaction. Who is this? Cause? What the heck is this? Yeah, okay. Very choppy chart. I wouldn't use that to trade. Anyway, if it gets to 78.50, it's going to 81.50. Meanwhile, you have buyers at 71 and backup buyers into 67.50. CRM, shorted it, made a lot of money on it. I'm not ready to short it again. So this looks like it wants to dip. So if they dip a little and then come back and take out wherever they failed from on Friday, they will end up at 352, 355. So that's shortable, not down here. Too good a company for me to short it for no reason. So if it approaches this area, I would short it. Anything above 350, it would be a candidate for a short. Up here, I shorted it blindly with naked puts, and it worked super well because that was an insane reaction to a meh report. The report was good. It was not great. And let me rephrase. It wasn't as great as the reaction. Solid support. That area of interest means like they could come down here for a reason, only to explore and close out orders that were done here and unfinished. So buy the dip if it happens at the low 300s. Otherwise, if the market is higher, this one will try to get to 350, at which point, if you want to short it there, I'm fine with that. CrowdStrike, mystery, total mystery to me. I would be very leery of trading. I wouldn't put my money in the stock because the investors in the stock are not brave. When they spit it out like it was toxic. This shows that they have no faith in the company management, zero. So I would not put my money in a bunch of investors that have this kind of conviction, very bad conviction in their own investment. You wouldn't see this in Apple. You wouldn't see this in Microsoft. You wouldn't see this in any of the large companies that we talk about all the time. I think this is an exit spot, and I would rather miss out on the spike to 450, which is almost imminent, than to be caught up here and be the fool catching one of these things. That's my two thoughts. The company's fine. I don't have nothing against it. I just have something against the investors in it. If I'm looking to go along this here, easily stated, not an obvious point of entry. Trading wise, yes, you do have an opportunity to break out to the number I just mentioned. Cisco, I am short, I think, or was it Oracle? Oracle. I would be short this one. technically speaking, this wants to dip either from here or from a higher point. So as long as it's below 63, it's worth fading. Credit call spread until you get comfortable that it's topped. Maybe I start a credit call spread here, and if it pops into 63, then I'll add the put or the put spread, and hopefully the combination works. Or you just leave it alone and buy the dip. Anything below 60.2 should be good, solid support short term. Earnings in about 17 days, but it might move with whoever's reporting. Oh, look at that. I didn't even look left enough. But see, my decision is solid. I'm either shorting it here or at 64 or at 66. So they did break out. So don't be too quick to short because they could have runway. But it's doable using longer dated things. Like if I'm patient and I don't need a reward this week, I can lay up a bearish idea, not being at risk even from earnings. Delta, I would flat out short up here. I am short UAL, the details of which are not that important, but if I wasn't short UAL or Delta, I would short them. Well, how about this? If I was long Delta, I would be out. Show me, somebody needs to explain to me the exuberance over the airlines at some point. Explain to me, why are we suddenly in love with the airlines when their P&Ls are still as scrappy as ever? They still have legacy problems. The only thing different now is they charge us an arm and a leg. Yeah, free Wi-Fi. I've always had free Wi-Fi with T-Mobile. I don't know if you knew that. If you have T-Mobile, you hop on the plane, almost all airlines will give you free Wi-Fi. You just have to go through a couple of buttons to get there. So it's not an entry point. It's an exit point. It's the shortable point. They just reported. Duke Energy, is this coal? Natural gas and related. Okay. So again, I don't know the industry. You should learn it. Very volatile stock for not very volatile P&L. Pretty bizarre. So you should know that you have a lot of active traders in there. Resistance from here through 115. Support from here through 105. Lose 104. And you will have a disaster on your hands. But there's nothing imminent. So you're range bound, and the range is pretty wide. So if you're an investor and you're holding calls, you want them to take out 111.50 quickly. And that'll give you $250, $2.50 maybe, $2 to $2.50. If you're an investor, then you're in. There's not much to do. See if you can sell some covered calls. Earnings in about 18 days. This is a buy the dip moment based on that letter M, but I need support, and it is falling into support. So how about I say it? As long as they're above 108, stay long. If we dip into 102, then I would be a little bit leery because they would have, basically trying to lose this one, and this one is too close. So earnings in 11 days, a lot of sellers at 126. They will need a reaction from the earnings to go above that. So at one point, this industry, actually retail, was through the roof. Remember it? When I hated it? That's what I think should happen to TPR, which is coming later. But anyway, this is a sell the rally mode for me. I couldn't justify it up here, and nobody could understand. I was asking, how is this trading better than NVIDIA? Well, now we got the answer. It shouldn't have been. You were right, Nick. It shouldn't have been. But if you lose this zone, I think this thing can come crashing down even more. Like, what the hell is this? Why did this happen back in 2023? So there's an off chance this thing will be below 65. So I would not buy the dip if I'm already long. That's my statement. If I haven't done anything and I'm already long and suffering, that's not where I would add. But that's me. I would add if it falls to 80 or lower. Then you have a chance of reducing your entry price significantly, and then you sell aggressive covered calls. Not an obvious entry point. 11 days and then earnings. Enphase, tradable, decent business, looks like death. One should say, okay, I can sell a put at 40 and get assigned, and you wouldn't be wrong. It's actually tradable from that perspective. I hate the way this chart looks for such a okay company. So I'm very leery of saying, yeah, you can buy the dip, you can sell puts. That's a freakishly scary chart. I can tell you it should never go back above 100, right? At least not for a long term. And 130, forget about it above that. If my entry price is way up there, I don't know what to tell you. I wouldn't throw good money after bad. Let's say I own 100 shares and my entry price is 130 and I want to double down. I think I would sell puts every week until I get assigned, because I don't want to double down here. I want to double down lower. And if it bounces really hard, and then my problems are solved, and I made some money in the meantime. So I would not buy shares. I would sell puts to buy shares. Earnings in 9 days. This will be interesting. Come to me before the earnings. Maybe we'll take a flyer on it. Maybe the options are telling us something crazy. Uh, 13 to 16 looks like selling zone with a backup selling zone above. Anything below 8, they're chomping on like candy. So bunch of buyers. I don't know where they're finding that 8 is the number, but it looks like it. There's no P&L. Chart's not going to help you except to tell you, do your homework, see the viability of the company going forward. If you like it and you want to invest 2,000 in it, just take 1,000 and forget about it. And if it falls below 5, then add the other and then forget about it. The chart's not going to help you. At least that would be what I would do. I'm not recommending it. I don't know anything about it, so you do your homework. Freeport. Okay, so it beeped at me this week, last week. You see that little long wick right there? Beep. Because I said, tell me when it goes into the support zone, and it told me. But this looks pretty ugly, and they just reported. So I'm a little leery. You could start a position here, but leave room to double that position. If they take out 41, they might get to 44. Otherwise, they might drift to 35 or 34, sorry. Which would be a better support zone down here. You could probably sell puts down there. I'm pretty sure it's on my to-do list. Yep. It is tradable. It is investable, provided you know something about the company. FFIV, no touch. What are you asking me here? Seriously, just what are you asking? What is the question? Earnings in 2 days. It's never been higher, has it? No. Does this look like an obvious entry point to anyone? No. If anything, it looks prime for a big dip. That's what it does. Huge rallies, big dips, huge rallies, big dips. And look at the P&L. So when a stock does this, I would never consider trading it or investing in it. Like I said, I don't mind the company, decent P&L. I hate the investors. The behavior of this investor tells me that they're either completely stupid, uncommitted, or being manipulated. Either way, they're unpredictable, so I don't want to do it. If I'm long this stock, I would aggressively sell covered calls, if not trim my position. Like, first, tell yourself, why am I trading it? Am I in it to invest for the long term? What is my target goal? If I'm anywhere near a target goal, if my return is 600% and I cannot bring myself to lock some profits, then what's the end game? When is the exit point? Everybody's got an exit point. Anyway, 2 days, we'll find out how they'll react to earnings. Wow, an incredibly impressive stock price action with pretty freaking boring P&L. Explain to me, make this make sense. This is crazy. This doesn't make sense. This drop does not make sense. This rally does not make sense. That's why I don't trade with illogical investors. They make them, they're unpredictable. Does not make an entry point up here. Buy the dip if you're looking to get long, or if you want to fade it, I'm fine with that. All right, this is video 1 of 3.